Hello everyone. Today we are going to talk about how not to mess up your transaction before it even starts. So here we go. So what am I talking about when I talk about shooting yourself in the foot or making things difficult for yourself down the road? Is that people sometimes do some weird stuff with their money when they're getting ready to buy a home. So some things that can occur that will be a problem later when you're in the process. So I'm talking a month or 2 months before you're in escrow to buy a home. There are some things that you could do with your money that could make it to where it's not usable. So something that you could do with your money that can make things very difficult for you is if you take the money out of your account. So let's say you've been saving money for a while, you've got 10 grand in there that you want to buy a home. But 5 months ago, you took all your money out of your account and you put it in a safe, or you kept it somewhere in cash, just waiting to use it for whatever you wanted to, and you just didn't want to leave it in the bank. And then you're thinking, well, I want to buy a house. I'm starting this thing. I'm going to take that cash and I'm going to deposit it into my account. And then let's say a month or two go by, boom, you're in escrow to buy a home. So here's the problem. That cash that you deposited cannot be sourced. There's no way of sourcing where that cash came from. See, a lot of the laws and the regulations that come with lending that have made things better for tracking illegal activity like money laundering have also made even regular things a little difficult for most people, because you're not money laundering. The average person isn't. There are people out there that are doing money laundering, and that's why these rules do exist. But the rules apply to everybody because they don't know. It's just across the board. So if you take $10,000 and you deposit into your account and you try to use that to purchase real estate, it's not sourceable. Now, what kind of cash deposits are sourceable are things like I had a car and I sold that car and I received cash. But the only way to source that money and make it tie together is to have a bill of sale, and the numbers have to match. I sold this car on this day, I deposited this amount of money on this day, and all those numbers match. Good, you sourced it. That worked. But regular cash doesn't work. Now, if you're looking to buy FHA, especially with FHA financing, it's not just your money that has to be sourced. If you're getting gift money from a relative, if you're getting, let's say, a gift of $5,000 to go towards your down payment or to help with your closing costs, that money has to be sourced as well. So that means the person donating that money to you or gifting that money to you will have to supply at least one bank statement to show that that money was in their account. It wasn't cash that was deposited and then they gave it to you. Now, things happen where you may not know these rules and you are getting a gift from a relative and it's still in their account and they decided, I'm not going to give it to you until I have to, basically. Now with FHA, they're going to have to give a bank statement. A lot of people don't like doing that. They're like, why am I going to give my personal information over to this bank? It's not even my transaction. But that's the rules with FHA. Now with conventional financing, here's a silver lining to that, is that with conventional financing, typically they can just say, I'm going to give you this money, and then they can wire it directly into escrow, and escrow accounts for it, and that's it. You just need a gift letter. Cool. But with FHA, no. So if you're getting ready to buy a house, or you know that you want to start looking, you're 2 or 3 months out from actually getting serious about it, leave your money where it is, or if you have other accounts, just make sure you're not depositing money into those accounts and then moving it. It all has to be traced, all of it. So if I look at your bank statement and I see that 2 months ago you made a $5,000 transfer from an account that I don't know about, I have to get that account statement to show where the money came from to make sure that it wasn't cash that was deposited and then moved. And the same thing can happen with your gift donors if you're getting money from relatives. If they say, look, I'm going to give you 10 grand, 20 grand, 30 grand, whatever the amount is, I'm going to gift you some money. It can't be cash that they had on hand that they then deposited and then turned around and give it to you, because now we can't paper trail it. We can't use those funds. So we've had clients that they have lots of money in their account, but because of all the money moving back and forth, maybe from other accounts that was cash or cash they had on hand and they put it in, all it does is muddy the waters and you can't trace it, and it looks like money laundering. Most likely, it's not if you're the average person looking to buy a home, but it looks like it because you're saying, look, I got this money. It was cash from this person who owed me something. Okay, how do we trace that? How do we track it down? So that's what all the regulations are doing. that they're trying to make it to where people can't just, do some salacious activity, make a bunch of money from it, and then hide that money by purchasing real estate or other big money items that cost a lot and trying to put it into buying a home. Because that's what people have done in the past, and people are still trying to do it today, and that's why those rules are there. So don't get caught in this trap. If you're looking to buy a home and you have cash on hand or something like that, it's going to be difficult unless you can get it into your account, and it just needs to be in your account for a long time. It needs to be your money in your account. Tricky things can happen while you're purchasing a home. Things like, hey, I've got some cash on hand, but you know what? Use the cash that you have on hand to pay your bills, buy groceries, do that stuff if you need to, while your pay stubs are building up in your account. That's another way you can do it, to where that's your money and it's sourced because it's your own money coming in from getting paid. Sometimes those are just those little stopgaps of, hey, I need $1,000 more and I'm short. Because that happens too. Extra costs might come up. What you thought you were going to need, you don't have enough of it, or you were getting money from your 401k and they said, well, you can't take as much as you wanted to, and now you're short some funds. You have cash on hand and you can't use it because you can't source it. It might just be a waiting game of, look, I just need to get paid again. Once I get paid again, there's going to be enough money to make this whole thing work. So if there's anything to take away from this, if you're looking to buy something, be very aware of what you're doing with your money and when. It's going to save you a lot of heartache and your loan officer a lot of heartache and your agent a lot of heartache when it comes to buying, because now you don't have to paper trail all this money moving around. It's just your money in the account. It's easy to see. There's nothing shady going on. They see it and you're good to go. So if you like this information, if you find any value in it, please give me a like on the video. I really appreciate that. If you have any questions, leave a comment down below. And if you haven't already, subscribe to my channel. I'm going to keep producing content like this. And the more comments and more dialogue we can get going, the more specific or diversified I can get into the subject of looking to buy a home. So that's it for me. All right. Take care, guys. Bye.